Good day to everyone joining us from around the world. Whether you're just waking up, midway through your trading session, or winding down for the night, welcome. On behalf of the entire WeMasterTrade team, we are truly pleased to have you here with us for this global live stream session. My name is Vincent, and I will be guiding you through this exciting 2-hour journey as your host. Today's live stream is not just a presentation, it's a conversation. It's a window into the engine room of one of the most fast-growing and forward-thinking frontier trading firms in the industry. And of course, I'm not here alone. I'm joined by two remarkable guests who have shaped what WeMasterTrade represents today: skilled traders, mentors, and role models within our community. First, let me introduce the ever-composed, always insightful, Paul. Welcome, Paul.
Thank you so much, Vincent. Hello, everyone. And thank you for spending time with us. I'm truly looking forward to today's session. There's so much to cover. Not just about trading strategies or rules, but about the full ecosystem that WeMasterTrade offers, from how you start, how you grow, to how you earn. This is the kind of platform that doesn't just fund trades, it builds traders.
Absolutely. And next to him is someone who brings sharp analysis and clarity to every chart and conversation. He's strategic, he's sharp, and he's a real force in our trading space. Please welcome Lambert.
Thank you, and hello to everyone in the chat. I'm genuinely thrilled to be here. What excites me most about today is that we're going to unpack everything, not just what WMT offers, but how traders can truly take advantage of each part of our system. From packages to promotions to ceiling and long-term profit sharing. If you ever had questions or even doubt, today is the day to ask us.
And that's exactly what we are here for. Whether you are brand new to WeMasterTrade or already a part of our funded trader program, today's live stream is going to give you a full picture, not just the highlight reel. Over the course of this session, we are going to walk you through what WeMasterTrade truly is, what we believe in, how our programs are designed, and why we are doing things differently from traditional brokers or pro firms. Now, I want to be clear. This isn't about sales. This is about understanding. We want you to know what you are signing up for, what kind of structure support your journey, and how you can use that structure to not just succeed, but scale.
And speaking of structure, we'll begin by sharing the story behind WeMasterTrade, how we were formed as a funding project, not a broker, which is very important distinction. Unlike brokers who profit from volume or loss, WeMasterTrade is built on the belief that your success is our success. We invest capital in traders, cover the risk for them, and share profits only when you do well. That's the foundation.
Exactly. And from that philosophy flows everything we offer, especially our trading packages, which we'll be discussing in detail. We explain the logic behind each one, what kind of trader they ever look at our packages and thought, which one is right for me. Today, we'll answer that.
And more than that, we will also do a live comparison between packages. We will be breaking down pricing, account size, maximum drawdowns, consistency rules, and even payouts, side by side, to help you make a fully informed decision. It's one thing to see numbers on a website, it's another thing to understand the intention behind them.
Right, and once you understand the packages, the next question is always, how do I stay compliant with while trading? So we'll move naturally into discussing trading rules, which honestly is one of the most important parts of today's session. We'll explain what the daily loss limit is and how it's calculated, why it includes both close and floating P&L, and how to avoid violating it, especially overnight. We'll go into maximum total loss, the consistency ratio, and we'll even address common misunderstanding about trade sizing and risk per trade policy.
And we won't just explain rules in isolation. We'll explain them in the context of live trading decisions. I'll share some personal examples of mistakes I made when I first started trading under funded conditions and how I adjusted. Because rules aren't meant to restrict you, they're there to protect the integrity of your growth.
And while we are on the topic of helping you succeed, we will be guiding you through our current promotion plan, including limited time discount codes, trader support campaigns, capital opportunities, and how to probably qualify and submit proof. We've had some amazing response to our promotion, but also some confusion. So we will be showing you exactly what to do step by step.
From there, we'll transition into a discussion on our scale-up plan, which I personally think is one of the most underrated parts of WeMasterTrade offering. Many people don't realize this, but we have a structural growth pathway in place. If you perform well consistently, you don't just get payouts, you actually unlock higher capital tiers. It's not just about getting funded once, it's about evolving into a six-figure funded trader.
And speaking of growth, one of the most powerful ways to build long-term income at WeMasterTrade is through our profit-sharing model. This is the heart of what makes us different from pro firms. When you trade on a funded account and generate profit without breaking rules, we share that profit with you up to 90%. But there's more to it than just the percentage. We'll explain the full payout cycle, threshold, and timelines today.
Now, I know many of you watching today aren't just traders. You are also educators, influencers, or people with large networks. That's why we are also taking time to explain our affiliate program. And we will do it transparently. We will walk you through how commissions are calculated, how affiliate referrals are tracked, and more importantly, what you need to do to qualify for payout, including a detailed explanation of the two referee rule and minimum funding conditions.
This is especially important because we want all our partners to feel confident and clear about their earnings. We've seen a huge growth in affiliate activity recently, and we want to ensure everyone is promoting responsibly, understanding terms, and building long-term income streams.
So, as you can tell, this is not just a surface level live stream. We are diving into everything: packages, rules, promos, scale path, profit sharing, and affiliate opportunities, all with one purpose in mind: helping you make the most informed, empowered, and confident decision possible.
And we want this to be interactive, not just informative. So if you have a question at any point, please drop it in the chat. Our moderators are watching and we'll answer as many questions live as we can. Your voice matters.
And if you're watching this on replay, don't worry, we'll leave timestamp and summaries below. And you can always reach out to our team with any follow-up inquiries. Our support team is incredible and they really care about helping traders succeed.
To wrap up this welcome, I would like to say this: WeMasterTrade is not just a platform, it's a commitment. A commitment to be real traders, to create fair, structured, and scalable pathway for people around the world who are serious about trading as a profession, not a game. So if you're here to grow, to understand, and to take action, you are exactly where you need to be. Let's dive into the journey together. Let's begin, and once again, welcome to the WeMasterTrade live stream. Now, before we dive into the packages, trading rules, and promotional mechanics, we want to take a moment to zoom out and offer you the full picture of who WeMasterTrade really is, what we believe in, and why we have built this platform the way we have. Because when you are putting your trust and your trading into a company, understanding its philosophy isn't just helpful, is essential. And so, this next segment is about origin, intention, and impact. This is about how WeMasterTrade began, what values underpin the firm, and how those values translate into real tools and outcomes for traders like you. And to walk through that, I'm joined as always by two people who live and breathe these principles, Paul and Lambert. Let's start at the beginning.
Thanks, Vincent. To truly understand WeMasterTrade, you need to understand why it was created. Unlike many prop firms or brokers that evolved from traditional financial institutions, WeMasterTrade was born with a purpose-driven mission to give capable traders access to capital, regardless of their background, location, or financial situation. We were founded in 2022 as part of WeMasterTrade Group, headquartered in Vancouver, Canada. While WeMasterTrade built its name on signal sharing, investor networks, and copy trading tech, WeMasterTrade was designed to serve a more focused vision to identify, support, and scale high potential traders, giving them a pathway to earn professionally without risking their own savings.
And it's important to note that WeMasterTrade is not a broker. That's not just a label, it's a fundamental difference. We don't profit from spread or commissions. Our success is directly tied to the success of our traders. That's why everything we build, from our instant funding packages to our profit sharing model, is structured with alignment in mind. We take on the capital risk, we give you the roadmap, you bring the skill. We also know that skill alone isn't enough, which is why one of our founding principles is education first. We don't want traders to blindly follow rules, we want them to understand the logic behind the structure. That's why we are invested heavily into the WeMasterTrade Academy, a training ecosystem built to take you from the beginner to consistently funded professional.
And that academy is something special, with courses ranging from introductory trading psychology all the way to advanced risk calibration and multi-asset strategy design. The WeMasterTrade Academy isn't just about theory, it's about implementation. We have designed a curriculum to master real-world trading environment within WeMasterTrade. So what you learn, you can apply directly to your funded account. And to ensure that our systems and content meet global standards, WeMasterTrade is proud to hold an ISO 2101-2018 certification, which confirms that our educational products and trader development programs meet rigorous international criteria for quality, structure, and learner engagement.
The certification is a big deal because it shows our long-term commitment to developing traders, not just collecting fees. In an industry where many so-called prop firms come and go, WeMasterTrade has positioned itself with real operation stability, compliance frameworks, and internal accountability. We're not here for a season, we're here to help build careers.
We've seen that commitment translate into real story. If you visit our testimonials page, you'll find traders from Nigeria, Vietnam, and Canada, and the Philippines, South Africa, all talking about how WeMasterTrade helped them not just earn more, but trade with purpose. They talk about passing challenges after years of struggling with retail brokers. They talk about finally being able to trade without emotional burden of risking personal funds. We have students become full-time traders, where women re-enter the finance world after career breaks. We had young professionals from underbanked regions finally access the market with a funded account. That's the impact, and that's what drives us.
And it doesn't stop there. The WeMasterTrade ecosystem is designed to grow with you. For those who want to stay engaged and up to date, we maintain a regularly updated blog section where our team of experts and educators share quickly insight, trading psychology breakdowns, market reaction, and platform updates. We believe that learning never ends, and we keep our traders informed. But let's talk about culture. What makes WeMasterTrade different isn't just about the product offering, it's the community mindset. We actively promote trader integrity, respectful competition, and knowledge sharing. Whether you're in a Telegram group, watching our YouTube series, or engaging with us on live support, you will see that we actually listen.
And I'll speak honestly here. In many platforms, trader is just a customer. We master trade. The trader is the product. Your performance drives the business. Your voice saves the platform, and your consistency determines how far we can scale together. That mutual accountability is rare, and it's something we're proud of.
And if you ever doubted whether this path is real, whether a trading career is truly within reach, I encourage you to read the testimonial, take a look at our funded accounts, and connect with people who have gone through the system. The story is real, the capital is real, the results speak for themselves.
To summarize, WeMasterTrade is a capital allocator, a talent accelerator, and an education frustrated institution. We are here to challenge the status quo of trading access, to build systems that reward performance over promotion, and to create real, scalable income opportunities for traders around the world, regardless of their starting point. This is more than a platform. It's a trading movement. And if you are ready to be a part of it, today's live stream will show you everything you need to know. Thank you, Paul and Lambert, for that deep and honest walkthrough. Coming up next, we are going to take this foundation and connect it directly to our actual offering. That means we will be discussing all the different account packages available at WeMasterTrade, how they differ, who they are designed for, and what kind of results you can expect from each. Now that we've explored who WeMasterTrade is and the principle we stand for, it's time to move into one of the most essential parts of this live stream, an in-depth discussion on our account packages. This is where it all begins for most traders, choosing the structure that best aligns with their goals, their styles, and their current skill level. And when we say packages, we are not just talking about the dollar figures. We are talking about frameworks. Each package at WeMasterTrade represents a different pathway toward growth. And today, we will walk you through all of them, what they offer, how they are structured, and most importantly, who they are designed for.
Exactly, Vincent. We master trade. We don't believe in a one-size-fits-all model. That's why we built two distinct product lines for traders, the challenge package and the instant funding package. Each line includes a variety of account size and configurations, because we know that traders come with different strengths, risk appetites, and timelines.
Let's begin with the challenge model, a two-phase evaluation system built for traders who want to prove the skill before being allocated capital. It's structured fair and has become the most popular route for new traders entering the WeMasterTrade ecosystem.
In the challenge model, you begin with a simulated account, and your goal is to meet specific profit targets while staying within strict but reasonable risk parameters. There are three stages in total: phase 1, phase 2, and the funded stage.
Take for instance our 10,000 challenge, a great starting point for traders who want to minimize upfront costs while building trading a track record. Let's break it down phase by phase.
In phase 1, you need to achieve an 8% profit target, which is 800, without reaching a 5% daily loss or 10% overall loss limit. You have a limited time to achieve this. That's the key difference from many platforms. We don't pressure you with deadlines.
Once you pass phase 1, you move to phase 2, where your profit target drops to 6%. That's $600. The risk rules remain the same, and here's something unique. In phase 2, you already start receiving 30% profit share if you exceed the target.
Finally, once both phases are cleared, you enter the funded account where you trade with real capital, have no profit targets, and your profit share jumps to 90%. That's one of the highest in the industry.
This account is ideal for newer traders and or experienced traders who want to start with lower pressure and learn the system. If you're still refining your strategy or want to get a feel of WeMasterTrade risk framework before scaling, this is the perfect package to begin with.
Now for those who are confident in their strategy and want to start with a larger account size, we offer 25,000, 50,000 and 100,000 challenge packages. The structure is similar. 2 phases, the same 5% daily and 10% total loss limits, but the profit targets scale proportionally.
For example, at the 50,000 challenge, you need to hit 4,000 in phase 1 and 3,000 in phase 2. While the targets are higher, the leverage remains the same. 1 divided 100, giving you room to adjust position sizing.
The 25,000 and 100,000 challenges are ideal for traders with more capital management experience, especially those looking to eventually scale into larger funded accounts. You already passed all the prop challenges or have a strong verified trading history. This is a good step up.
Every challenge package comes with a one-time fee. For example, just $45 for the $10,000 challenge. This fee is refundable once you become funded and meet minimum performance conditions. And if things don't go your way, you are eligible for a 30% reset discount to start fresh. What if you don't want to go through a challenge at all, but instead want to access real capital immediately and get paid based purely on results? That's where our instant funding packages come into play.
And this is where WeMasterTrade truly sets itself apart. For our instant funding model is designed to give experienced, disciplined traders the chance to trade real capital from day one. No evaluations, no demo stages, just pure live trading backed by a structured, fair and transparent system.
And what makes it even more accessible is that you can choose from several different account types depending on your style, preferences, and goals. Today, we're working to walk you through each of the 5 main instant funding packages: standard, 51010, 510 510 no PC, and customized. We'll compare the details, but more importantly, we help you figure out which package is right for you.
Let me set the scene quickly. All of our instant funding packages give you live trading access from day one. That means no challenge phases, no evaluation. You pay once, follow the rules, and you are trading live capital. And every account, no matter the size, includes no time limits, up to 90% profit share, scale up land toward $1 million, support for EAs, swing trades, scalping, and even HFT. Now, let's go package by package. And as we go, Paul Lambert, I want you to jump in with real advice. Who should actually choose which one, and what kind of traders you have seen success with each?
Let's start with the standard package. I always describe this one as the best friend for traders who just want stability. You're getting up to 200,000 in capital with a very manageable 4% daily loss limit and 6% overall limit.
It's like that calm, steady account that doesn't push you to overtrade, and with a profit split up to 90%, there's serious earning potential even if you're taking a slow and steady approach.
And how about a commission?
Competitive across the board. Forex at $4 per lot, gold at 4 per lot, indices at 0.5, stocks at just 0.07 per lot.
And everything is allowed: news trading, scalping, weekend holding, EAs, HFT, you name it.
So for the audience, if you are someone who trades regularly, understand your strategy, wants a full range of assets, and plans to play the long game, this is your sweet spot.
It's perfect for intermediate to advanced traders who already know their edge but don't want to stretch with the target-based challenge. If you have ever had an account blown due to unrealistic rules, you'll find the standard model refreshingly fair.
I'd also say issue swing traders. The 4-6% risk profiles give just enough flexibility to hold multi-day positions, especially with weekend holding fully allowed.
Alright, moving up a gear, let's talk about the 5-10-10 package. Same capital ceiling up to 200,000, but now you get 5% daily loss and a wider 10% overall limit. Why does that matter?
The extra cushion is massive for traders who scale into position or take multiple entries per setup. You've got more room to breathe, especially in high volatility markets.
And the profit target here is also 10%, which aligns well with the risk window. Plus, you still get full support for scalping, EAs, news trading. It's very trader friendly.
This is the best for day traders, especially those trading assets like Nasdaq or gold that move fast. You've got a tested intraday strategy and just need some risk breathing room. This is your package.
And also for traders who want structure but don't mind having that profit target. The clear milestone motivates some people, especially if they're payout oriented.
Now here's a personal favorite, the 5-10-0. You get 5% daily and 10% overall loss, but no profit target. None, zero.
And that's a blessing for high precision traders. You're no longer chasing a number. You just focus on protect equity and growing capital slowly and safely.
This one is loved by low frequency trader and sniper. If you enter 3 to 5 trades a week, this is your space. You're not penalized for patience, you're actually rewarded for it.
Veterans, swing traders, risk conscious traders, people who prioritize consistency over speed. If that's you, you thrive here.
And let's be honest, not everyone wants to hit targets. Some just want to trade well and scale cleanly. This is their home.
Now for the rule breaker, or rather, those who don't want to be evaluated on how even their profits are. The 5-10-10 no BC remove profit consistency tracking, right?
Exactly, same 5-10 risk profile, and you're not required to keep your profit growth smooth.
That's it. Trade copiers are not allowed in this one, so it's for manual traders only. And you need to trade responsibly. But for aggressive traders who sometimes hit big spikes, this is the place.
Perfect for high-risk reward traders or anyone who had issue with consistency rules at other firms. You trade now, you won, just keep it inside the drawdown box.
And last but not least, the customized package. This is WeMasterTrade saying, you know what you need, let's build it together.
You can adjust daily loss, overall loss to your liking. Plus, you can find up to $400,000, more than any other accounts.
It's premium, flexible, and comes with all trading style allowed, including expert advisor, new trading, weekend holding, high frequency trading, and more. top-tier professional, ex-hedge fund traders, signal providers, high-volume traders, anyone with a very specific structure in mind, this package lets you build it.
I always say, if you try other models and nothing quite fits, build your own blueprint with customized. The freedom is rare.
To sum up, every instant funding package we offer comes with a clear risk parameter, fair commission, cheap market access, and real profit potential. There are no time limits, and payouts start as early as 1 day in.
And no matter your strategy, scalping, swing, angle, or manual, there's an account that aligns with you. The key is picking the right one now, so you can start building consistency from the start.
And if you're ever unsure, our team is available 24/7 to guide you. But the real secret, pick the account that fits your discipline, not your dream. The right fit always outperforms the biggest promise.
Up next, we will walk you through exactly how to protect your account, avoid breaching, and understand the key risk and consistency rule that power our entire platform. But before that, we will take a short break and then we'll come back later. back everyone. Now that you have seen the packages, let's talk about the part that either makes or breaks your account. That's right. It's time to dig into the trading rules and how to actually stay compliant once you are funded. Because let's be honest, getting funded is exciting, but staying funded, that's where the game really begins. And the number one reason traders lose their account is come down to one thing: the daily loss limit.
Yes, the dreaded daily loss is the one rule traders think they understand until it kicks them out of their account at 3:17 p.m. on a random Tuesday.
But here's the good news. Once you understand how it really works, it becomes one of the best tools for risk control. So today, let's break it down from top to bottom.
So, what is the daily loss limit? Also called maximum daily loss.
Uh, it's the maximum amount of loss you're allowed to incur in both floating and closed trades. Uh, on single chain day, if your equity falls below that limit, even for a moment, your account is automatically closed.
And the key thing is the daily loss is calculated from the higher of either your balance or your equity at the start of the trading day. That's the really important distinction and it's what trips a lot of people up.
Let's walk through a live example. Imagine it's the start of day 5. Your balance is 105,000. Your equity, however, is higher, 107,000, because of open floating profit.
If you're on a 4% daily loss limit, we calculate it off the higher number, 107,000.
So the 4% of 107,000 is around 4,000. That means your equity for the rest of the day can drop below 102,000 or boom, the account is gone.
Right. And I think it's important to point this out. The system isn't waiting for a close. It's real time. Even if your trade is floating loss and you haven't closed it yet, if your equity dips below that threshold for even a second, that's it.
Now let's reverse it. Say it's the start of day 7, your balance is 100k, your equity is 99k because you open trades are slightly in loss.
Since balance is higher, we base the 4% on initial balance, so 4,000.
So now your equity must stay above 96,000 throughout the day. If it drops to 95,999, auto liquidation kicks in. No warning, no margin call.
The system will send a market order to close all trades. Everything liquidates. Your account is disabled and you can't trade again unless you purchase a new packet.
And here's the kicker. The auto close happens when the system detects the threshold was crossed, but due to market fluctuations, you find a P&L might look worse than the actual threshold. That's because the system executes a closer based on price slippage at the time of liquidation.
So even if you only intended to take a 3,900 loss, one slippage spiking will go on NASDAQ and suddenly it's 4,200. That's why we say don't ride the edge.
Alright, let's talk about how to avoid violating this rule because this is where the pro mindset kicks in.
First step, know your buffer. Never plan trades to take you right up to the edge of your limit. Leave at least 10 to 15% room below the max loss, especially in volatile markets.
Tip 2, check your equity, not just your balance. I can stress this enough. Most traders stare at their balance all day, but if your floating loss is dragging your equity, you're heading towards a violation.
Tip 3. Use a dashboard or tracker. Inside WeMasterTrade, we will write risk dashboard that show your live loss status. Use them, check them. Don't rely on memory.
Also, post trading after a big loss early in the day. If you lost 3% in the first hour of London session, maybe it's time to stop and reflect, not try to revenge trade your way back up.
Another big one, trade smaller during news hours. If you are trading gold during NFV with full lot size, you are practically begging to break the daily loss rule, cut position size, and ride past volatility.
What are the top rookie mistakes you see when it comes to daily loss?
Number 1. Over leveraging. Traders opening positions that than 5, 6, 7% of their account, thinking they close quickly. But if the trade turns red fast, it's already too late.
Number 2, holding overnight without checking exposure. If you hold 3 trades overnight and wakes up to a 60 piece gap, the daily loss could be hit before you even open your eyes.
And the third, assuming that close trades are all that matters. They are not. Remember, equity includes both floating and closed position. The total equity life is your score.
I always say this to new traders. The daily loss rule isn't your enemy. It's your account airbag. It's designed to protect you from doing something irreversible.
Exactly, it fosters discipline. You can be aggressive, but only within the box. And if you learn to trade inside that box, you last longer than 90% of the market.
And one last note, this isn't just about rules, it's about trust. WeMasterTrade funds you because we trust that you will manage risk responsibly. The daily loss is there to protect that trust on both sides. Now, let's go over the mad loss rule, also known as your account stop loss. The line that can be crossed, not just for the day, but for the entire life of your account.
And this is where a lot of traders misunderstand how the rules work. They think, well, I didn't hit my daily limit, so I'm fine. But then a week later, they chip away at their account and suddenly liquidation.
The max loss rule is the last safety net. If the daily loss is your daily seat belt, then max loss is your airbag. If that limit is hit, it means the account is deemed unsalvageable under the current trajectory and is closed immediately.
So what exactly is the mad loss rule? Let's define it simply. It's the total maximum amount you are allowed to lose across all trades for the entire account. If your equity, that is your real-time capital, including open trades, ever drops below a certain percentage of your starting balance, your account is gone. Period.
And unlike the daily loss, which resets every day, this one doesn't reset. It's cumulative. You can lose 2% one day, 3% the next, and if your total loss crosses the line, that's it.
And the percentage limit depends on your package. It's typically at the 6% or 10% of your initial balance, not your equity, not your profit, but the original number you started with.
Let's walk through a concrete example. Suppose you have an instant funded account with an initial balance of $50,000 and your mad loss limit is 6%, which is 3,000.
That means your equity can never go below 47,000 ever. Doesn't matter if you made 1,000 yesterday, the total loss from your highest point back down to that threshold is what matters.
And remember, this rule includes both closes and floating losses. So if you lost 2,000 in close trades and you have another 1,200 floating in red, your equity is now at 46,800. That's below the limit. The account closed.
And just to be clear, it's not about the net gain or loss across trades. It's about where your equity stands in real time, relative to that stop loss law.
Here's where it gets interesting and a little tricky. Let's say your account grew to 51,000. Congrats, you're in profit.
But your max loss limit is still based on your original 50,000 starting balance. If your limit is 6%, the threshold is still 47,000. What changes is how much room you have to fall before you hit it.
Exactly. You now have 4,000 in total buffer because 51,000 minus 47,000 equal 4,000. So your profits give you cushion, but the floors never move.
Once your equity drops below the maximum loss threshold, even by a few dollars, auto liquidation triggers. All trades are closed immediately at market price.
And again, like with the daily loss, if there's volatility or slippage, your account might close out below the line. That's just execution reality.
And most importantly, once it's breached, that account is permanently disabled. You will need to purchase a new package if you want to continue trading. No reset, no rollbacks.
Alright, let's get tactical. How do you actually trade inside this rule without constantly worrying about it?
First, track your total close losses every day. You should always know how close you are to your max loss floor. Don't wait for the dashboard warning. Calculate it manually.
Second, use your profit as protection, not permissions. Don't treat floating profits as a green light to increase risk. Instead, consider locking in gains by reducing lot size when you are ahead.
Third, manage your floating loss aggressively, even if you are positive overall. A single trade with poor stop placement can take you from safety to shutdown in a few minutes.
Fourth, stay cool, wear your clothes. If you're down 5% out of your 6% limit, that is not time to double down. That's the time to step away, pause, and retain your entries.
The biggest mistake, underestimating floating drawdown. Traders close 3 losses and think, okay, I still got room, but they forget about the fourth trade floating minus 1,800.
Second, traders who chase recovery after a bad day, they lose 4% in one day, come back swinging the next day thinking they make it back, and instead take another 2%, boom, violation.
Third, and this one hurts, ignoring slippage during major news. Even with a tight stop, new candles can gap you straight through your limit.
The max loss rule is there for a reason. It's not there to punish you, it's there to protect you from yourself. Every successful trader I know sees their stop loss, whether personal or institutional, as a non-negotiable battery.
Right, it's a reality check. If you are consistently pushing up against your max loss, your problem isn't the rule. Your problem is your system or your psychology.
At WeMasterTrade, we are not just giving capital, we are teaching structure. And the max loss rule is what separates gamblers from professionals. So remember, your max loss is a percentage of your starting balance, typically 6% or 10%. It's calculated using equity, not balance. It includes both close and floating losses, and once reached, your account is gone. Coming up next, we will go to the news section. Today, September 23, global markets are focused on a series of PMI releases from Europe, the UK, and the US, alongside key speeches from central bank and political leaders. These events are shaping investor sentiment and creating potential trading opportunities across major currencies. Paul, can you tell about the Eurozone?
I will talk about it. Let's get to the Eurozone. Today, the PMI release show a fragile and uneven recovery. In France, manufacturing PMI is 50.2, above previous 50.4, a small uptick. Manufacturing is holding just above the 50 threshold, meaning only very slight growth, not strong enough to change the market sentiment, but avoid contraction. About the services PMI, 49.7, below 50, contractions. This is key as services dominate the French economy. Weakness here signal demand side pressures and slowing business activity. In Germany, manufacturing PMI is 50, improving from the 48.8. Germany's manufacturing, which was contracting, is now stabilizing at neutral, positive but fragile. Regarding the services PMI, 49.5, down from the 49.3, up from the 39.3. Services remain in contraction. That's concerning because services usually provide balance when manufacturing struggles. Regarding the Eurozone aggregate, manufacturing PMI is 50.7, stable versus the past. Services PMI is 50.6, slightly better than forecast, but still borderline. Takeaway is the Eurozone is hovering around stagnations. Manufacturing is trying to recover, but services are dragging the economy down. This points to weak consumer demand and potential energy structural challenges. Euro outlook is neutral to bearish. Traders may stay cautious ahead of ECB policy signal, as this data does not support tightening. Regarding the United Kingdom, their manufacturing PMI is 47.1, unchanged, stay deep in contractions, reflecting persistent weakness in production, new orders, and exports. Services PMI is 53.4, a down from 54.2, still in expansion but slowing. Struggling demand is softening. Taken away, the UK economy relies heavily on services. The drop in services PMI suggests momentum in cooling, while manufacturing continues to be a drag. GDP outlook is likely bearish. The data reinforces expectation that the Bank of England might remain cautious, especially with inflation concerns easing.
United States manufacturing PMI 52.2 versus forecast 53, previous 53, still in expansions but missed expectations. This shows resilience. The growth is moderating. Services PMI 54.0, slightly below 54.5 period, still strong, meaning the largest part of the US economy is expanding at a healthy pace. Richmond Manufacturing Index -5, improved from -7, still contraction but improving, which add a positive nuance. Key events: President Trump speaks at 8:50 p.m. Political remarks may add volatility, especially if trade tariffs or fiscal policy are mentioned. Fed Chair Powell speaks. This is the most important event of the day. Markets will look for hints on monetary policies, inflation, and interest rate guidance. Any hawkish stance could strengthen the USD, while dovish remarks could weaken it. Takeaway: US data show resilience compared to Europe and the UK. The USD is supported by relatively stronger PMIs. Powell's speech will likely set the tone for the next move in USD pairs. USD outlook bullish bias ahead of the Powell's, both with high volatility risk. Market sentiment and trading implications. EU or USD With euro data, relatively stronger US data bias is downward. If Powell is hawkish, this bet could test lower levels. TPP USD, weakening US services PMI, stronger USD, also bearish bias. Watch for support levels to break if power signals more tightening. Gold, if power is hawkish, USD raises and gold could come under pressure. If dovish, gold might fall relief. Indices mixed. Weak European data may drag EU indices, while US resilience supports Wall Street. The power's comments will be decisive. So overall picture, Eurozone weak and stagnant. EU are bearish. UK services slowing. Manufacturing weak. GDP bearish. US still expanding. Focus on power. USD bullish. Volatility reached the night. Very hard during Powell speech. In summary, today's data highlights a fractional hard Eurozone, a slowing UK economy, and a still resilient United States. This keeps the USD supported, while the EUR and GBP remain under pressure. Traders should be cautious and expect significant volatility during Fed Chair Powell's speech later tonight, which could set the direction for the markets in the coming days.
And that is all the news for today. Thank you so much for joining us. We hope you found this session valuable and gained some new insight. Remember to subscribe, like, and share this session if it helped you. And stay tuned for our next one. If you have any more questions, feel free to reach out. Until next time, happy trading and take care.